What is up, everyone? Hope all of you guys are doing good. Hope all of you guys are having a great Monday. Monday is always very important, guys. The first of anything is always important. It sets the tone for the rest. First day of the week needs to be a banger. First set of the workout needs to be a banger. First tray of the week needs to be a banger. It's always the same. I'm seeing Mr. Debatman in the chat. Tasty. Alphamiri names SAN07. Mr. Bar Wars, Crypto 420. Kingsley Claw. Anki Chopper, Mountain Main, SK, TWT. Mr. Debatman asking, what's the cheapest laptop I can get? Mine just bricked this morning. I know you want at least 16. I have an Asus ZenBook, and it works incredibly well. One of the heavier ones, though. Anki Chopper, the models I've seen perform best have been the ranges with followed after swift moves. While felt models may have been scrappy price action. Is that so? Well, it depends on what type of scrappy price action that you use, but if you are in like just an ugly wiki environment, then that's obviously vulnerable to failure of the model for sure. Mr. Drop at top in the building as well. Sunfinder, Bon, Leon Steer, XAM, Mr. Jamal, Sean, No Way Jose at the gym getting a workout in while I watch the stream. Absolute legend. Sean is listening to this before heading to the stream or to heading to the gym. You guys are warriors. I went to the gym this morning, did a quick little leg day. I always die during leg day, and I don't like leg day, but that's why I do it on Monday, right? You got to start with what you hate. But, you know, talking about price action, today has been a pretty chill day overall. Let me quickly check if everything is going good. Yeah, it's going good. Today has been a pretty chill day overall. Typically on Monday, there's not that much price action, especially when the weekend has been delivering amazing moves. And the weekend has been delivering incredible moves. So right here, you can see the long that for me is still a runner, which is from down there ever since we traded that low time frame third tap, which, you know, ever since price action has been making higher lows and higher highs and is moving now towards that range high, potentially completing that high time frame model 2 accumulation schematic, which is what we initially expected. Luby Lou is in the chat. Easy, brother. Long time no speak. Hope you're good, brother. I have tagged you like 3 times in our chat, but where have you been, bro? I've missed you. I hope you're good as well. I hope you're good as well. But yeah, Bitcoin is simply going up. It's basically what we were expecting based off the Model 2 accumulation. There was some uglier price action in between this area. This area right here for me was not extremely clear. It was a situation where we did have a confirmed Model 2 accumulation, but the moves up weren't that good, and we did leave behind reasons to go lower. But, you know, ever since Friday, we got this beautiful reaccumulation model in this lower time frame range right there. And that's also where we took our second long that I already cashed out, leaving this one open. So we're quickly going to talk about that trade in there as well. This higher time frame accumulation and just the overall expectation going forward. I also just released a video on X. I highly advise all of you to go and check out this video as well after the stream, because I kind of give a Bitcoin update video referring back to the post I made March 8th. Okay, now let's get rid of that P&L shot and talk about some price action in here. So just as a fresh reminder for the people that are tuning in that typically that haven't seen the pre-planning, what we kind of had here was that compression effect. And with compression, I mean that prices are making higher lows while also making lower highs, represented with this liquidity curve. So you can see this compression effect. And typically when we have a compression, the first move tends to be the fake move. So the overall expectation was price getting a move down and then sweeping that low, coming back inside, and then coming back down for a third tap to get that rotation back up for the Model 2 accumulation schematic. And that's basically what we got, right? It's basically what we got right here. We got that second tap. This was our tap 3 on a lower time frame. I'm not going to go in depth why that was your tap 3, but on a lower time frame, that indeed mitigated the extreme demand in this zone right here. And that's also where our initial entry was. Now, price action afterwards came back for another third tap, which on the higher time frame is your first third tap, because this was very tight, right? The time displacement between the taps was very little. And that's also when price is vulnerable to come back down to create a better third tap. And it is then also allowed to even take out that initial third tap and then go higher. And I would actually love if price actually did that. It would have made things more easy and more predictable. But now price kind of came back for the extreme demand in this region as well. And we saw the bounce from there making higher lows and higher highs. But I didn't like this low. So this low, it wasn't the best low. And that low kind of also held me back from being 100% confident in a rotation back up. Now, that doesn't mean I'm going to change anything based off the long position that was open, right? That still stays the same. That's a runner. If I get a short confirmation, I'll rather open up a hedge position than close my long and open up a short individually, you know, so that way you can always benefit off of both moves. But, you know, price has been stalling around in here, came back up and then came back down. And now I initially didn't have any support levels in this area right here. But then later on, we found out that it was indeed the POC of this high time frame range that we were in. If this volume profile loves to load, there you go. So you can see this red dotted line. That was the POC. Price tapped into it, and we created a beautiful model from there. So let me briefly go over that model right here. So what price did, it was actually some nice price behavior, I'm not gonna lie. What price did here was right here on a lower time frame, right? we can see our initial range low, we can see our initial range high, and then price is slowly coming back down, and we're getting that deviation 1, right? We're getting that deviation 1, and then price comes back inside, and then we get that deviation 2. Now, on the 10-minute, this is not actually a valid 1, 2, 3, because there's not valid structure. On the 5, you do actually have valid structure in between the taps, so this is a valid Wyckoff model 1. Now, as you should notice, the time displacement between the taps is very little, right? The time displacement between tap 2 and tap 3 is very little. And whenever that's the case, right, this also looks more like a structure move rather than a proper tap. Whenever that's the case, price then can come back for a potential higher time frame third tap, like we literally just discussed on the higher time frame model. Okay, so when I zoom out on the 50-minute, that's when you can see that these two taps simply merge into one tap, and then price can come back for that 5-minute extreme demand and create a better looking Model 2 accumulation schematic. And that's also what happened, and that was beautifully on the Friday New York session, which is also where we went long live in the private live stream during the New York stream. So right here, you had that 3-minute break of structure. So this is your tap 2 on the high time frame. That's your tap 3. It's always an addition to the model if you have, a lower time frame extended model, which on the higher time frame looks like a simple normal model. And whenever we want to confirm the accumulation, you simply check what's the highest point that price traded in between tap 2 and tap 3, which is right here, and then you measure the structure down towards that third tap low, obviously following the 6 candle rule. Now you can see price making lower highs and lower lows here, where there are lower highs and lower lows. And then you can see that market structure break right there. Okay, market structure break right there. So that's where we went long based off the Model 2 accumulation schematic. And then we targeted the range high, which is for a 2.5 RR. Now, obviously, this is the first accumulation model, right? This is the first accumulation model inside, like high probability, I should add. This is the first high probability accumulation model inside of the higher time frame model. And that's always the situation where you can get that low time frame entry for that potential high time frame target, right? You can literally get a 27 RR based off one thing, and that's understanding a simple accumulation model. But I was already long from lower, so I was just simply looking to trade this to the technical target and then keep that runner open from 79.7k as my runner simply. Now, what kind of happened from here, and a few extra details towards the setup, is that on this break of structure, what was so nice and what made me really confident in the break of structure itself is the fact that we had like 4 equal highs right above. So you had this high right there, and that got front ran with this high, and then those two highs also front ran each other and the previous highs. So you had 4 equal highs up there, which is just a very strong liquidity draw, right? It's a very strong liquidity draw. And therefore, when price breaks structure here, you don't have to be as cautious for a potential fake break because, one, there's no reason to go lower. But if the model decides to fail, right, which could happen, doesn't really happen when you're trading high probability setups. But the fact that you have the liquidity above is like a magnet. So when you break structure, you're going to get that overall rotation back up to that liquidity target, which just adds to the idea of prices going higher when you're trying to long, right? That's the entire key point. Now, the same way we turned this kind of like Model 1 into a Model 2 into a simple Model 2 on the higher time frame, we were taking the trade on Friday. So when it's Saturday, right, you can expect some range-bound price action to occur. And therefore, if you zoom out on an even higher time frame, you can see that your tap 2 and your tap 3 on the mid time frame simply merge into one tap on the low time frame, right? Where if you look at this, it's simply one move down and then a move up and then a move down, right? There's no structure in between 2 and 3. Therefore, this is simply one move. So prices could always later on, if you range for a while, come back down for a high time frame third tap with a 1, a 2, and a 3 like this to then get that reversal back up. And when you kind of have these scenarios where your low time frame model turns into a mid time frame model, and then that mid time frame model turns into a high time frame model. Those are the scenarios where price is really setting itself up to expand pretty aggressively, which is what we have been doing ever since this weekend, right? So then you simply have to check, okay, where are the POIs that price can come back for a third tap? Now, from an extreme demand perspective, it's very simple. Right there, you have this 5-minute demand chain. And the reason why I'm saying demand chain is because you have this 5-minute demand zone right here that created that 5-minute demand zone. Okay? Demand creating demand, therefore this being a demand chain. It's also right in that tap of the Wyckoff model, therefore making this market maker demand. When you have an order block backed by a Wyckoff model, I like to call that market maker demand because it shows literally market maker involvement in the chart, because Wyckoff is smart money. And we have that as our extreme demand POI, but obviously we can also use the first higher low that got created. So when we look right here, higher low and higher high, this is that first higher low, and that is then our extreme liquidity. And you need to grab either extreme liquidity, or you can say and or mitigate extreme demand. So right here on the weekend, price came back down, and then right there, you broke your structure back to bullish. That was the easiest long confirmation where you can re-enter, stop loss locally. Even though it front ran it, the break of structure already confirms. And then you can have that as your winner as well. And I think that would maybe even net you more RR. I'm not completely sure, but it's a very tight stop loss. 0.4%. Like, look at this, guys. That could net you 33 RR. Like, people look at me sometimes when I'm like, oh yeah, you can make 5% a week, you know, consistently, if you just have the patience to wait for high probability models. And they look at you and they're like, yeah, sure, buddy. And then I showcase them the way you can simply enter a trade based off 2 of the exact same models, and boom, there's your 33 RR, right? Find that low time frame entry for the high time frame target, which has been explained in the mentorship already, right? That's what we do here. It's not just lots of people talk, right? Lots of people talk, little people execute. And there's a big difference between execution, okay? There's a big difference between execution and talking about price action, okay? Because executing requires an actual entry system with clear invalidations, clear targets, and great psychology, trading psychology, whereas talking about price action, anybody can talk about price action, right? And a lot of people can even be right talking about price action, but that doesn't mean that they can execute based off it. It's a completely different game. So you need to have a system in place where you always have the same set of rules that you can follow very easily, right? So that's why, in my opinion, it's just one of the best ways to be trading, right? You can see it here. We have the confirmed Model 2 accumulation that sets this range high as like a magnet in price, that overall we should be getting that rotation back up, right? And then when you get the low time frame accumulation model, right? When you get the low time frame accumulation model, you can get the refined entry for the high time frame target. And even if you take a partial TP, which is valid, you can take a partial there to de-risk. Even if you take a 50% TP, right? You can still net 15 RR. 15 RR, guys. Let me tell you a little secret, okay? You need to think from a longevity standpoint. Lots of people want to get too rich too quick, and that's why they blow it all. I'm talking about a 33 RR setup, okay? A 33 RR setup. That's 33% on your account. That's a 33x on your risk per trade. Let's say you risk 1% of your capital, meaning you would have in a single trade a potential 33% gain. If you were to partial, maybe even 50, maybe even 10, right? If you can make 5% a month, guys, if you can make 5% a month and you start with 10K, you can have $15 million in your account balance by making 5% a month, compounded over 10, 15 years. We're talking about 33% opportunity in a individual trade that's not going to take a month to play out, right? So if you have the patience and the system in place to wait for these models, and you can compound that over time, it's going to be the most rewarding. It's going to be the most rewarding. Okay. So that's basically the trades that we took. It was a low time frame, high probability model in confluence with the high time frame model where the long is still active. But you have to realize that there was a period in time ever since this entry and ever since that retest, right up until that point, this piece of price action highlighted in the blue box, where there was no trade for me on Bitcoin. Right? You can go to Forex. Forex delivered, Forex delivered some amazing setups. But when we're just focusing on Bitcoin, you have to realize I'm sitting on my hands. I'm sitting still. I'm waiting. I'm observing for an entire week. It's an entire week where price action can be a bit uncertain, a bit unclear. And then boom, you get your confirmation. You see what you want to see. It immediately jumps out to you. You don't have to search for it. And then voila, you get that beautiful expansion up. And there are your monthly profit goals. Literally, monthly profit goals. Think long term. Okay, definitely think long term. But now I am expecting an overall rotation on Bitcoin up towards 95-ish K, which would be the range high. And the thing is, a lot of people are talking about that the move was created on the weekend and therefore being a very weak move. But that's simply an outdated concept. That's honestly an outdated concept. If you pay close attention to the last month, not even month, the last months, you will realize that, you know, Saturday and Sunday have been amazing high time frame pivot point days. And there's a big difference between liquidity. How do I say this? There's a big difference between calling weekend price action simply liquidity or no liquidity. Because a lot of people will look at the weekend and they'll be like, oh, wait, this low is like, or this tap right here is created on the weekend, so this is weekend liquidity. No. I look at weekend liquidity the same way I look at normal liquidity. This is not a liquidity point. This is the third tap of a model 2 accumulation schematic. This low, grab liquidity, confirmed the model, market maker stepped in and pushed price higher. The only reason why price is going up is because market makers are pushing price up. People with the ability to push price are pushing it up. That's why it's going up. They are entering right there on that third tap. Trust me, these whales, they do not lose. They are not liquidity, okay? So when you have a model 2 accumulation, I don't care that the date is on the weekend. Weekends have been delivering very good high time frame pivot points for a long time now, okay? There's a big difference in that versus, for example, this right here, right? When we look right here on the left at that equilibrium, like you can see these highs build up. Without me looking at any dates, I can immediately see right here that this is liquidity based on how it looks. And then an addition is the fact that the high is created on the Saturday. That's when I call this weekend liquidity. I don't just go on the charts and then look where the Saturday highs or Sunday highs and lows are and then call that liquidity. I look if it looks like liquidity, and if the dates are during the weekend, that's when it becomes weekend liquidity. But, you know, according to my TA, I don't really have anything up here that price can reject from. I have mainly just highs that are building up to be lower highs compared to the previous one, like a lot of lower highs. So maybe we could reject from the volume area high. Yeah, so we're stalling around that volume area high right now. But if you break through that, it should be an overall decent rotation back up towards the range high, right? Now, if we reverse down from here, that's also always a possibility. Probably if you were to reverse down, you would need to create some sort of a distribution model in order to have the fuel for price to actually reverse and cancel out 2 accumulation models that are pushing price. So if that were to happen, maybe this turns into a 1, that turns into a 2, and you kind of come down and you do something like that. Now, if that were to develop, then obviously we will be trading it and we will be adapting to the data that has been given to us. But as of now, I don't think this is that likely of a scenario. But hey, things can always turn around, right? We're always adapting and pre-planning different scenarios. But I kind of want to open your eyes to the bigger picture and my overall bigger expectation, because right here, when we look, and I've written an in-depth post about this already, but you can see right here on the 3-day, this used to be your range, okay? This used to be your range right here. And that range had a tab 1 and a tab 2 right there. But you never came back for a tab 3, which is actually more bullish than bearish later on, right? Because you don't have a proper distribution model at the highs. But ever since here, we have just been leaving above these highs. You have one resistance POI, which is this daily order block. But besides that, you just literally, you have highs right there. All these highs, they're stacking up to be lower highs, meaning there is a lot of liquidity up there. Now, my idea is that we front run that 72K level, right? Which is just this high time frame structure demand. You can call it 73 as well. It's 73, 72-ish. And we front run that level. And then we go back up again to create a weekly range. Why a weekly range? Well, if you follow your weekly structure and you follow the 6 candle rule, price is making higher lows and higher highs right here. That is not a weekly break of structure. That's a 3-day break of structure. On the weekly, this is not a valid structure pool because you don't have the 2 consecutive bearish closing candles. So price can go back up here, you can come down here. That's what we are trading the accumulation. And that accumulation, if it makes a new all-time high, right, can go over in a weekly distribution model where we draw the range because we're in an uptrend from high to low. And then from there, price is free to deviate it, come back down, come back up for a third tap, and then put in an actual proper distribution model for lower. Okay, for lower. So that is my overall idea and has been my overall idea ever since the beginning of March. Again, after the stream, go and make sure that you watch this Bitcoin update video right here. It's also 23 minutes long. But that's kind of my preferred scenario where if price even comes back up, you would already or would trigger the range high, which is the target of the accumulation model, right? You would already have touched the equilibrium of that weekly range, right? Where it would be with your range high right there. That can be your RH standing for range high and being and your range low right here. So then if we get that move up and you touch that equilibrium right here, that would already confirm this as a weekly range. Now, there's a big difference between a high probability range, right, or just a good looking range versus a confirmed range. Because a confirmed range simply has to tap and mitigate that EQ, whereas a high probability range, we got have proper sideways price action. So we can deviate that range high after completing the model. You can get that rotation back up. You can reject from 105. You can spend some time in here. Like, it's free man's land, right? You can do whatever you want, and then you can get that move back up, deviate, come back down, and then create some sort of like a distribution model, something like this. Like, this would be amazing, right? This would be amazing. Simply get that expansion, create another, 2-3 ranges in the process of delivering a high time frame distribution. But this is what I would love, right? This is what I would absolutely love. And in the process of this happening, if this were to happen, I would love it even more if some of your altcoins could start outperforming Bitcoin, right? Where some altcoins are creating high time frame accumulation models or PO3 models, and I want those to complete all those high time frame setups, and then from there we can actually start to distribute again. So that's kind of my overall vibe of the market, right? That's my overall vibe of the market, where my preferred idea is to complete that accumulation that we've been pre-planning since the beginning of March and kind of get a move back up and create a high probability range from there on the weekly, which can, again, take time. The reason why I've been very accurate is because basically all that I've been saying is, hey, we're going to create a range. It's probably going to break towards the upside. We're training the accumulation model, or if it's a distribution, it's going to break towards the downside. We're training the distribution model. But every expansive and aggressive move that we've had has been followed with a range. Every time if you can simply say, hey, let's create a range, you're on the right path, right? Because that's what the prices love to do. That's what prices love to do. So this is kind of what I would love. Now, obviously, there are a lot of variations from this distribution model. Like it can do whatever it wants, right? Just the distribution. It could be a model 1, it could be a model 2, it could be an extended model. The time displacement could be tied bigger. There's more aggressive price deviations. Lots of things that could happen from there. But the purpose, and this is very important, the purpose of the current move up being to deviate the all-time high. What that deviation will look like is up for the market to decide, but that's what I'm referring to with the move up here, okay, to create that weekly distribution. So we're going to see, right? We're going to see how it develops, but that's where I'm placing my bets, okay? So I'm in longs. Those longs are all risk-free. They're all risk-free, in profit. I have 2 spot positions, and from there, we're going to see how it will play out. And USD dominance has just been an amazing confluence with Bitcoin's price action, you know? Because sometimes Bitcoin doesn't have the clearest model, but then USD dominance makes up for it. And I'm clicking these away one by one. One by one. So we're going to see, right? We're going to see. But yeah, this is going to be awesome. Hitting that target would set me up for just April. Let me check the chat real quick. What happened to Wyckoff Insider? Wyckoff Insider is unfortunately sick. I wonder what your girlfriend thinks when she keeps hearing model 100 times from your mouth. Yeah, she sometimes replicates what I say, and it's like, return to zone, accumulation model 2, model 1, distribution. I say it too often, bro. But I'll have to, you know? I have to until it's drilled in your guy's head. Mr. Smile, is VIP worth it? Well, if there are VIP members in the chat, you guys can answer for me. But if I just talked about, you know, different 10 to 30 RR setups that you could have taken that we took live on stream, you can easily make back your 10-year subscription. Mr. Akira, what do you think about hitting that weekly order block to get down back to the range low? Weekly order block to get back down to the range low. I don't have a weekly order block. I don't. What do you think about hitting that weekly OB to get back down to the range low? I don't have the weekly order block, but maybe you mean that daily order block? But yeah, I would just prefer to get a move towards 95.1. I think that's the range high. And from there, simply start ranging. You know, you can do whatever you want, but start to go up. It can deviate it. It can even turn into a distribution, right? It can turn into a distribution. That's always a possibility to keep in mind, right? You can move back up. It can deviate that range high. You can come back down, and you can turn it. You can deviate that high, come back inside, turn this into a distribution model with like nice trendline liquidity. And if that were to happen, then probably this will just turn into a bigger distribution and things will take a bit longer. Now, I do have to say, right? I do have to say that if that were to happen, let me check real quick. That's 3-day. I think if that were to happen, it kind of depends on how price action develops. But if this accumulation were to turn into a distribution model, and it's a high probability distribution, and you come back down and you start deviating that low into like your support level and you get an accumulation, you know, that would still keep my high time frame idea intact, right? That would keep my high time frame idea intact where this can simply be a macro range right there. Now, I do have to say, if you turn it into a distribution, you come back down and it turns into a higher time frame accumulation, that is actually pretty decent, okay? Like going up without a high time frame, like this is an accumulation model, right? But when you go up with an accumulation model like this, it just shows that they're truly filling their positions to push price higher. Now, the purpose could be to distribute, but right here, when you're leaving that liquidity below, it adds probabilities of price going down later on, you know? So that's kind of, it could turn into a distribution. Like I said, we're going to adapt to what the market gives us. But if it does, I would expect, or I would say I would prefer it to turn into a mid time frame accumulation and then pump from there. That would be awesome. Mitigating that demand. And then you can say, hey, we mitigate demand. So then later on, when we actually distribute, right? Later on, when we take that high and we actually distribute, then that demand is not there anymore that can hold price up. But this could also be a nice play, right? Then you can refer to this as like a low time frame accumulation model turning into like a mid time frame distribution that turns into a high time frame accumulation. Accumulation to distribution to accumulation. We've seen it before, right? We have seen it before. So it could happen. We're gonna see. But I do have to say I don't really have any resistance up until 103, right? Up until this daily order block. I did have resistance here, but the strategic reserve already pumped us into it, you know? That was why we were watching for a potential lower high for the lower low. But this is also definitely a potential scenario that that could happen. Either way, on my longs, right? I'll simply take profit at the range high. Now, I want to have a quick look at ETH, because I'm curious and I haven't really taken the time to have like a high time frame outlook here. I'm creating so many groups. Yeah, this was kind of the situation that we're in. So we had that compression effect, and then we deviated the high, got the breaker structure back inside, got the bearish PO3 on Jan, and that dumped price all the way back down. It looks so obvious in hindsight, but I was not expecting price to particularly go lower than this demand zone at that point in time, which is already a crazy target, right? I cashed out at 3K with that bearish PO3. And now we deviate the low, mitigate demand, and you're still, you know, you could get a back test like this, but I'm not really a trend line trader, so I couldn't tell you how we'll react to that trend line. I know that there will definitely be a lot of people watching it. On the lower time frame, you know, according to just my TA, is you have different resistance levels, right? So we actually longed, looking back, we actually longed this accumulation. Like this actually ended up having some follow through. I would have not expected that. But we longed that Model 1 accumulation. And from a resistance standpoint, I have two main resistance POIs above us, where we have this structure supply, which is backed by this range POC, and it's a market maker order block because of the Model 1 distribution backing it up. And then right here, you have the retest of the volume area low, where you took that liquidity and you dumped back down, and you created a 6-hour supply zone in the process, okay? So right here, you had that 6-hour order block, and I was like, you know, if I was like on this accumulation, I thought hopefully I preferred if, because there was still some unmitigated demand below here, I was hoping for price to have that accumulation, turn it into a distribution model to go lower and take out that low, right? And then you get that 1, you get that 2, and then you get that good looking 3, and then you squeeze back up, right? That was my preference. Because of also kind of the lower time frame unmitigated zones in there, where you can see that this high time frame block has been mitigated on the lower time frame. So I sometimes like to draw that below that mitigation to get the unmitigated part. But we have simply been trending higher, and you have to realize ETH is not particularly known for proper accumulation models prior to expanding, right? We all know how ETH likes to develop when bottoms create themselves. But that's kind of all that I'm having for ETH. And I'm thinking to myself, right? Of like, okay, when would I actually flip bullish on this chart? And I don't really have a good answer to that. I think, right? I think for me to turn bullish, I would want price to like come back inside aggressively, reject from some resistance, and then get some sort of like a high time frame, good looking model on the retest, confirming that you're gonna get like a higher low for the higher high. That's the only way that I could turn bullish on this chart, because as of now, it's like I don't have anything in here, you know? I don't have anything in here. So if I want to turn bullish, I want to see an aggressive expansion back inside, preferably mitigate some resistance, come back down, and then get the confirmations for a higher low for the higher high based off, confirmations for the higher low for the higher high based off a high probability accumulation model. Literally. That's what I would need to see. Because right here, leaving all the liquidity below, I know it's usual for ETH, but if I want to turn bullish, I would need to see something like this. I'm just checking the chat now. VIP is worth it, 100% worth it. Code it. Made a yearly sub off of one single trade. You know, I forgot the person's name, but someone recently joined, pretty new, and he also took the trade and he had a winner, and he was like, but wait, you're telling me I can risk $50, I can risk $100, and then make 300 realized instead of like investing in the meme coin, right? Where you can get a 3x, which is then unrealized, and you don't cash out because you're expecting 100x, and you can just get different 3 RRs, 5 RRs, 10 RRs, sometimes 30, like we just seen, and then realize it like that. And he was like, why isn't everybody doing this? I was like, well, it's harder than it maybe looks sometimes. But bro, his mind just opened up to the possibility of like, man, I can take control of the future of me, you know? I'm taking the trades. I'm not depending on any external factor. Like, I know when the model's supposed to be working. I'm not gonna get rug pulled, you know? Drop a top. I bought subscription for the next 10 years. Guys, he's actually not lying. Absolute legend. Absolute legend. Drop at top. Your subscription expires in like 2034 or something. Luna's top G. How many time frames do you go down to find micro entries? Oh, bro. If I want to find I'm always aware of everything. I'm aware of all time frames. So if I'm here talking about Bitcoin, right, and I want to have that refined entry on the 1 minute breaker structure, I know what everything is doing. Like, the context is always clear in my head. And that's also why I can trade lower time frames effectively, because I know what the higher time frames are up to, you know? So all the time frames that you see on my chart, I'm not really that much on the monthly time frames, but I check everything. I map out, I build context, I see the accumulation, I know where I'm at on the chart, which just takes all time frames to kind of, you know, scan through, and kind of build some TA and some lines on the chart like that. And then on the low time frame, I know what everything is doing. So I'm the opposite of like a fixed time frame type of guy. I use everything. See, some people talk about an XLM distribution. Now let me look, because I've seen multiple people ask me about XLM. Mind you, this is not really a pair that I actively trade. And this is a TA that I had on it. That's just your market structure high. I'm curious which demand zone I had down here. Ah, 1 hour structure demand. Okay. One hour structure demand, and then you bounced as of now. Did you take that liquidity? No, you didn't. Took the liquidity only from this block. Yeah. Like I'm already seeing I think I'm seeing the distribution that you guys are referring to. Now, based on context, right? You did get that expansion back up. You're probably retracing actually into some fibs now. I don't really use fibs in my trading, but when you're talking about swing points, you know, you can see that you have your fibs as a +1 confluence. They fall perfectly on demand zones, I just realized. Look at that 786. Perfect mark structure high right there, 786 and demand zone. So definitely an interesting area if you do dump down. But I do have to say I like it when prices are having an expansion back up, put in an individual high and never take that high. So you put in a high and then you simply have swing lower highs right here. You know, I do like when price behaves like that because you never had the proper distribution model and you have easy to use market structure to confirm a rotation back up. Because following market structure alone, not looking at anything fancy, no accumulation models, looking at structure alone on a macro time frame, you right there you have price trending down. I'm checking this low is 0.0988 9825. This went lower, and then you got that breakout structure back to bullish right there, and then price made a higher low for the higher high, right? So simply right here where you have that line, that is simply your breakout structure. So based on the simple breakout structure, expectational order flow would be a higher low for the higher high. This was a crazy expansion. It's crazy, bro. But the high time frame structure and the high time frame context that you can get a higher low for the higher high. And this is where you can combine different levels of structure, okay? Because you're expecting a higher low for the higher high, but there's no confirmation for it. Now, when would you actually confirm the higher low for the higher high? That's when you can use your different level of structure, the structure from the top down that's trending down, making lower highs and lower lows here. And if that breaks back to bullish, okay, if that breaks back to bullish, that will confirm a rotation back up towards new all-time highs, which right here or right now will be right here, okay? So if you can break, following simple level 1 and level 2 structure, if you can break this market structure high, okay, you could get a rotation back up following string structure towards a new all-time high. Now, preferably, you would want to find an entry in here that you can take towards that market structure high instead of having to enter at that breakout structure, because then obviously the RR is a bit messed up also on spot. But what could also happen if you don't get a clear confirmation, but price does indeed break structure right here and you retrace, you can look for that higher low for a potential swing higher high again. Okay, so that's kind of the high time frame outlook. Now we are coming into two individual POIs. One is already mitigated and the liquidity from the block is grabbed, but what I'm seeing here is a range formation where price, I think, also deviated the range high right there. Yeah. So you had an initial range low, you had the initial range high, you got the deviation at the low, you got the deviation at the high, and now you're getting the deviation at the low again. Making this a potential Model 1 accumulation schematic. And you guys were referring to like a 1 hour distribution model. So what I'm seeing here is indeed potentially an accumulation, right? Now it's a bit less good because the move down is very aggressive coming into that third tap. Now falling structure locally, you are making higher lows and higher highs right here. So you can pull that structure from, or that range from top to bottom. And now we could have a potential distribution here. Now keep in mind, it's kind of against context, right? But you could have a 1, 2, and 3 right there. Now let's quickly check if it meets the requirements. So based on the size of the model, right, when you see that lower high for the lower low right there, that is most definitely your market structure high. And therefore your extreme liquidity. Let's zoom in on the lower time frame to see what that top would look like. Yeah, there's nothing really in that high left. No, there's nothing. So that extreme liquidity is good enough. You know, and then yeah, you could have indeed that. I should put XLM back on my watch list, eh? God damn. Am I the only one seeing just clean models when I quickly look at it? I'm seeing like some sort of distribution price action in here. I'm seeing like a 1, a 2, and a 3 that went over into an extended model. And then I'm seeing local return to zone, local price action in there. And I'm seeing a 1, a 2, and a 3. Where you can get that accumulation. And we've seen it all the time. Long the accumulation into the third tab of the distribution. I used to have it in my watch list, but it's not there anymore. So I low-key don't know why I got rid of it. But it definitely has nice price behavior for sure. Look at that accumulation model. It's beautiful. But also here, this is a beautiful model. Look at this return to zone, guys. That's like that's a good looking model right there. 18th of March. No, that's besides the point, but I'll put this bad boy back on my watch list. Don't know why it left in the first place though. But looking at the distribution model, like there is obviously the potential that this turns into a Model 2 distribution. Like we have seen it all the time that, you know, you get the accumulation where the purpose of the third tap is to create the mid time frame distribution model. But I do like it less. You got some nice sell to buy price action in here that has demand. And then right here, you also failed to properly break your structure. That's obviously not a good break of structure, guys. And that's also in conflict with the volume area high. So it's kind of similar to like a Pepe situation where if we go to Pepe right here, oh, Pepe is aggressively pumping. You gotta love to see it, right? You gotta love to see it. Go Pepe. But I was gonna refer to Pepe where I was like, oh no, it was actually Doge, but also Pepe where I was like, I don't really like this distribution model. I never liked it in the first place, and I also didn't like the potential extended model from it, right? So I didn't particularly like that because of the context. And it was similar to Doge, right? Where you could have a 1, you could have a 2, and you could have a 3. But I didn't like it because of the context. And it's the same on XLM. You don't have a confirmed model. Technically, yeah, this is a decent looking model. Maybe it works out. But if I want to trade it, I'll rather want price to come back down kind of solidify that third tap, bounce, and then I would want to have some sort of like a low time frame distribution model in here. So I can already be de-risked and I don't have to target this as my first TP, you know? I want that low time frame entry because we're trading against the context because Bitcoin is indeed intended to go higher. And I want to trade on the low time frame with a high probability model, be de-risk and let it run and then get some profits or stop that break even, for example, and don't want to open this big of a position in the current market environments because I'm just expecting, I want Bitcoin to go here, right? Now, it doesn't mean it's going to be straight one shot up, but overall, I would want Bitcoin to just go up. Oh, I'm just checking the chat right now. The internet connection is good on my end. I'm not sure if it's... let me know in the chat, guys, if it's all good now. Lagging. Thought it was my internet. Glitch mode. Maybe it lagged for a second, but it should be all good now. We Gucci now? Okay. Should be all good. All good. Perfect. The sound is lagging. No idea how the sound can be lagging, though. The sound? Maybe you need to, if you refresh, it should be all good. Fine, all good now, all good, we good now. Refreshing fixes it. Okay, perfect. Perfect. Yeah, so there are some interesting charts out there. Obviously, I've been talking about TON for a long time now, where I would absolutely love a PO6 here, right? So when I'm referring to Bitcoin moving up, kind of making a new all-time high, and therefore also giving altcoins potentially room to run, TON is one of those coins, right? Where I'm like, man, you have this PO6. And what I mean with a PO6, it's simply two PO3s, right? So you have this high time frame macro range manipulation expansion. And then if you have in that manipulation phase on the high time frame, right? In that manipulation phase, you have your own PO3. So the manipulation phase of the high time frame model has its own individual range manipulation expansion, and that's where we are currently in, bouncing absolutely from the last level that you can bounce from, like the most extreme of the extreme. Like the upper section was already the extreme point for me, right? But then it came back down to the POC of that accumulation range, you know? So the TON is definitely an interesting project that I have skilled in on spot, actually. So right here we have bought some spot. It's very funny, right? How we're talking about this PO3 ever since February, right? Where price broke down. And literally the moment we mitigate the most extreme support POI right here, news gets released after breaking structure back to bullish, right? After breaking structure back to bullish back inside, you get the news release that Pavel is Pavel Durov is getting released from prison or moving back to Dubai, or just bullish news regarding the owner and the founder of Telegram. You know, it's very convenient timing. But yeah, definitely liking the chart here on TON. Personally positioned on spot here. Invalidation is simply this low, and the target is a new all-time high. And guys, I'm telling you right now, if altcoins start to run, you want to be trading them like this. Okay, you want to take them from, you know, the $3 region back up to like that $8 to $9 region for that 170 200% moves, those 3x's, and then cash out. And when you can do that over a longer period of time, you're gonna absolutely be smashing it, right? You're gonna be smashing it. So Tom is definitely interesting. We also talked about Kaspa, right? We also talked about Kaspa. The chart doesn't look that good, but there's definitely potential. I also like the look of CRV. I actually talked about CRV long before anybody talked about CRV, because it was the only pair that had a proper accumulation model. Like a high probability confirmed accumulation model. Like when all these pairs, like most pairs, put in that third tap, right? And then they were kind of slugging around in here and kind of starting to look ugly. CRV was the only one that put in that third tap and actually got follow through towards the upside, which is really good. So, yeah, CRV definitely also a good chart. Haven't taken a spot position in this, but definitely at the extreme of the extreme as well. Ankit Lars, where are you in terms of your personal 100 million target? I'm good on my way, brother. I'm good on my way. It will happen. It will happen. But you forgot to add 25 before I'm 25, and I'm turning 21 in. I'm turning 21 in May. Omar, Lars, why not take the XLM short and just close it at the demand for 2.5 RR? Because that's not the way I trade, right? When I have my model, I target the range low. Obviously, you can apply trade management if price turns against you, but I just wouldn't want to take a short with a high time frame technical target in current market environment. I'd rather be in and out quickly. Luna's Top G, do you have a book that you can recommend that teaches you the relationships between the market, between Nasdaq and Bitcoin, and also all the economic data, just for a general understanding between the market and the economy? Brother, I am the worst guy to ask about books and overall economic data. I always forget to check the news daily. Like, I don't use it. I only watch charts. Now, I can definitely see some benefits for, you know, understanding the macroeconomic environment for, you know, financial markets and risk assets as a whole, but it just hasn't been me, bro. I just haven't been doing it. Imagine holding CRV since day one. What do you think of ADA? I can lastly do ADA. Let me quickly check what Cardano is doing, because I do have Cardano in my list. I'm not a big fan of the ADA chart, to be honest. Not the biggest fan. Oh, not the biggest fan of ADA. Like, if I had to give two resistance POIs, it would be these two. Let me quickly identify them on the lower time frame. They're both already mitigated on the lower time frame, so they're not even the best. Like, the best is already mitigated, right? Yeah, so you do have two weekly order blocks that you can check out in here. But on the lower time frame, they're not valid anymore. My like, I wouldn't want to say ultimate target, but like my strongest resistance level was this, what was it, 3-day? Yeah, it was this 3-day order block, which was just, you know, it swept liquidity, it broke structure back to bearish. You had some inducement on it, meaning you front ran it, so you could sweep some liquidity coming into the block, and that's what you that's where price pumped into, like truly like a pump, quote unquote, out of nowhere, basically. But this was when, you know, everything started to look good again, and the Dino coins like ADA pumped incredible. Anything extra is just like a bonus. If I were to be in ADA, you know, because kind of what we had is you had a 1, you had a 2, and you had a 3. So you had your model 2 accumulation, and price actually broke structure. Okay. And then price came back down for just the extreme market maker demand, meaning it's the demand that's created in that third tap of your Wyckoff model 2 accumulation. Okay. And then right there, you got that reconfirmation, which led to another proper break of structure. So following your swing structure, you know, you can expect a higher low for a higher high, right? Because swing structure is still pointing up. Now, that's the swing structure, right? The structure from top to bottom is making lower highs and lower lows. And we know when you break that back to bullish, that could mean that the higher low for the higher high on the high time frame is in. Now, this was that market structure high, and that high got SFP'd on that strategic reserve news. So you SFP'd that high, and that pump was on the strategic reserve BS. And ever since, price retraced all the way to the extreme demand of the move. Okay? So we can use this entire zone if we want to, but even mitigate it into the more refined levels on the lower time frame. But basically, the extreme demand of the entire move got mitigated. Okay, now you can expect a higher low for the higher high, but if I would expect it to go particularly that much higher than this high right there, I'm not so certain. You know, it could do it, right? But this was such a strong level, I wouldn't be surprised instead of making another higher low for the higher high, it simply is the start of like a weekly range that then ends up distributing and then goes lower or something. You know. Now, if we start to close aggressively above this, it could squeeze through. But I would not expect that, especially without a proper accumulation model. Because there's no accumulation model down here. Like, you don't have an accumulation model based off this entire piece of rangy price action, nor do you have an accumulation model that's like right here on the lower time frames, you know? So I don't have anything here, honestly. But I'll happily be proven wrong. But I think there are better charts out there that can deliver better returns than ADA. But guys, again, I'm telling you, once you can truly let go of the low market cap meme coins, you know, I've been there as well. You know, I've benefited off them as well. But when you can, I wouldn't say get rid of them. I would say when you can finally just start trading charts, no more cycle theories, no more nothing. Since crypto is getting more and more established, those theories are starting to be used against you, and you got to be able to read charts effectively, right? If you can read charts and you can simply trade them from high time frame support to high time frame resistance, and therefore net those 100-200% returns, those 2-3x's, I'm telling you guys, you're going to compound incredible, especially with the low time frame leverage scalps and just mid to high time frame leverage trades in between. It's absolutely amazing. Okay, absolutely amazing. And the fact that like Sean LaFleur is a great comment. More established is more smart money involvement, is more high probability trades for us. I'm gonna add to that these volumes of these coins stay pretty consistent. You know, like these ADAs, the XRPs, the TONs, they all have decent volume throughout years. You know, they don't just have 500 million volume one day and then no volume the other day, which has to do with establishment as well and allowing for active buying and selling of bigger positions for market makers also. So, you know, I'm telling you guys, start locking in on the trading, start studying the mentorship, print that shit in your brain, rule for rule, be able to trade it. And if you like that content, simply join the Discord. In general, just join the Discord. It can be the free or the VIP section, but you're going to get the best ROI on your money. Better ROI than the crypto market in the current past months, right? So lock in. We're almost 3 months into the new year. A quarter is almost done. I want you to look at yourself in the mirror and ask yourself, have I been giving it my all? Have I actually been locked in? Have I been journaling consistently? Have I been sticking to my plan? Have I been sticking to my routine? Have I been sticking to the goal? Am I on path to the goals I've mapped out for myself this year? You have to have those reflection and realization moments. Otherwise, the year is going to fly by and you're going to look back and you were not aware. So study awareness. Lock in. There's plenty of time. Okay? But it's going to go to waste if you don't feel like there's no time every single day. Objectively, there's plenty of time. But if you feel like if you don't act each day as if there's no time, then you're going to be behind. Okay? So, lock in. Get rid of any hopium. The TCT community is an absolutely amazing fucking community. I love the TCT community. We are grinding, bro. I'm getting held accountable for not posting. I did my meditation session in the morning. You know, it's insane. But I appreciate every single one of you. It was a great stream. Make sure to check out this video on my Twitter. I'm gonna send the link in the chat. If you want to check that out, I highly advise you. It goes in depth about macro things and high time frame views, which we also kind of did this stream, but I definitely advise you to go and check that out as well. And I'm gonna see all of you in the server or on my socials. Okay, I appreciate you guys. See you all next time. Peace out.